what's going on here, YouTube? Corey Smith here, CoreFX, bringing you guys another trading video, another free video here for you guys through my YouTube channel. Anybody who's watching this, who subscribes to my page, I really appreciate the support. Thank you guys. I hope you get something out of these videos. I make the weekly analysis video not only through my page here, but also professionally through T3 Live's professional trading YouTube page. So please check them both out every week. I have them uploaded by Sundays to give you guys an outlook on the week and what is going on fundamentally, technically, what events to watch out for, what fundamental events mean in the markets, which ones are impactful. There's a lot of free knowledge in those videos. So if any of you guys follow them, appreciate it. You follow these other videos, I appreciate it as well. Please subscribe to my page if you like what you see. And I'm going to go ahead here and jump into the topic of this video. The topic of this video is going to be trading frequency, and essentially what it is I'm get asked a lot of times questions about how often should you trade, how do you know if you're trading too much or too little, and really one thing that had a very lasting impact on my trading was when I personally looked into my trading frequency. And when I started trading professionally for companies, I started to realize that when other people look at your trading, you really start to realize what mistakes you're making a lot more, because you start getting asked questions of why you took this trade, or that trade, and then you start to realize the emotions made you take them, and you didn't have an exact reason, or you had a lot of reasoning for a lot of the trades, and then a couple of them you couldn't explain. And if you eliminated some of those that you didn't take for a specific reason following your plan and got rid of some of those losers, your trading actually might look a lot better than you expected it to. So I made this trading video to kind of give a little more insight into the frequency of trading, how to determine how much you should be trading, and ultimately how to work on your over trading, as most traders will be suffering from that. So take it on to the next portion. We have essentially three different types of traders in any style of trading, but we're talking about Forex here. So we've got our scalpers, our intraday traders, our 15, 5, 10 minute time frame charts that look to scalp and essentially take higher leverage positions on smaller pip moves to try to catch these little intraday changes in price. These are going to be our more frequent trading type style traders. These are going to be the guys that are on at the high liquidity times and really that are jumping in and out of trades more frequently. There can be any number of different time frames you analyze, but they're typically going to be all less than about the 30-minute time frame. They're all going to be about 15, 10, 5, or the minute tick charts. These are going to be your faster, more frequent traders. They're going to hold their trades for a lot shorter time period, and they're really just going to be in and out intraday, not doing any overnight holds or any long-term holds. It's really just the in and out trading. And those types of traders, their strategy calls for more frequent trading. So although that doesn't mean you're trading nonstop, it is a more frequent trading style. Then you have the swing trader, which is a little less frequent. They're going to be using more of the intermediate to higher time frame charts. Hourly, 4-hour, daily, 30-minute, 2-hour, 8-hour, all these kind of charts fall into the swing trader. You can see higher time frame, analysis like I teach you guys here at CoreFX on the weekly and the monthly charts. However, for entry and exit purposes and analysis, it's typically going to be the hourly, 4-hour, daily type of time periods, 30 minutes, 2 hours, all those. Our swing traders are going to be more medium range holders. They're going to hold for a couple days to a week, maybe a little bit longer at different times. As you guys know, at CoreFX, I'm a swing trader. I am a trend trading swing trader, so this is the bread and butter of how I trade. Then you have the position trader, the longer term trader. They're going to have a lot more infrequent trading. They're going to be rarely ever getting in and out of a trade in the same day or week. It's typically going to last weeks and months when they get into a trade, so they're going to have very small amounts of trades, as they aren't going to be looking to make a lot. They're going to be making big moves over a long period of time without making small, sporadic, and more cumulative trades. They're going to have the long-range holding times. They're going to use the higher time frame charts, the monthly, the weekly, the daily. They're typically not going to care about what's going on a 4-hour, hourly, 8-hour, 2-hour, 15, 30-minute, any of that. They're typically going to only want to see the longer term actions. A lot of times they'll be watching the fundamentals and they'll be looking for long-term fundamental moves. However, this is another style of trading, and these guys are going to be more infrequent. So really, type of trader you are is going to have a lot to do with the frequency of your trading. However, there is still a level for each one that you could be compromising depending on how you trade. But these are the three types of traders, three types of trades. You got the scalper, small pips, in and out, lots of trades. Swing trader, decent amount of pips, not so many trades, but still decent frequency. And then the position trader, high pip sizes, high profit trades, but by pip volume size, however, very small amount of trades and infrequent trades. So that's going to be your three types of traders, which is going to have an impact on the frequency of your trading. Next, how to find your style. So really what determines if you're going to be a scalper, swing trader, or position trader, 90% I would say comes from personality. However, personal life and the other two are important. Your personality is something that you really can't change. It's just intuitively who you are. It's ingrained into your DNA, essentially, from how you were raised, how your whole life has been leading up to this point. You can't really unlearn your instincts. You can't really remove your personality from the picture. What you have to do is find a way to trade around your personality. So essentially, if you were a very impatient and need to act, can't sit there and watch a chart without doing something, you're going to have to find a system around scalping. You're not going to be able to enter a trade and let it just sit there and move slowly for a period of days, hours, weeks. You're going to need to develop a system that is going to have you in and out of the markets. Otherwise, all you're ever going to be doing is fighting against your emotions and fighting against your impatience and wanting to get in and out. If you're a very patient person, you don't like high action, you don't like high risk, you don't like things moving too fast, you're going to want to be a position trader. You're going to want to enter a position with a long-term bias and just sit on your hands and let it go and let it play out. If you're a little bit in the middle, which is kind of how I am, I don't really like the scalping the smaller time frames. I don't like sitting there and watching the minute charts go all over the place. However, I do like action. I do like excitement. I find that trading in general gives me all of that, and I have enough patience to let a trade go. I can't sit there and let a trade play out for 2 weeks or more. I even struggle letting a trade play out for a week. So I can't be a position trader. I probably could be a scalping trader. I just haven't found success with it, and it's not as close of a fit to my personality as swing trading is. So I found what my personality calls for, and that is swing trading. So that's what I stick with. And essentially, that's what you guys need to do as traders. Find what works for you. And then also, your personal life is going to come into that a lot. You work a full-time job. What are the hours? How much time do you have behind the charts? If you only have an hour or two a day, you're not going to be able to be a scalper. You're probably going to be able to be a swing trader, and you're really going to be able to be a position trader. So the more time you have to dedicate, the difference of the trading you can be. You know, how much obligation do you have to other things in your life? Can you check charts frequently? Can you not check charts frequently? Do you have access to internet? Tools, access to tools. Do you have 24/7 access to internet and a computer? Or do you only have access to a computer when you are at a friend's house or at a school library or whatever it may be? If that's the case, you can't be a scalper and possibly might not even be able to be a swing trader, because you're going to need to have access to these positions at any time. And all of that. So that's how you can help determine with that. Funds to trade with, that's kind of one of those tricky subjects, because really, essentially, any style of trading, risk is going to be about the same. But for smaller starting position traders, scalping is going to be a little difficult. Scalping, you're going to need some pretty good leverage to make decent amounts of profits off of small moves in the markets. Yes, you can just increase your position sizing, but a lot of times leverage with regulated brokers can get in the way with that. You can't have multiple positions open with certain leverage and all that. So that can have a little bit of an impact on it. If you have a smaller account, swing in position could be a little bit more useful. But all in all, the most important one in this list is going to be your personality. The personality of the trader is going to certainly stick out the most, and it's going to be the biggest dictator of your style of trading. So that's how you want to determine your style of trading before you can do anything with determining your frequency of trading. Now, the frequency of trading styles, this is not written in stone. This is simply a guesstimate, an estimate, just to give you guys a little bit of an idea. Scalper, there are scalpers that have systems that they're in and out of 50 trades in a day. There's scalpers that are in and out of a trade a day and they're done for the day. There's all different levels for all three of these categories. This is just a hypothetical, educated guess. These are definitely backed by facts and by statistics. However, there are outliers and there are other scenarios that can play. There are millions and millions and millions of ways to make money in these markets, so nothing about any strategies are dictated by anything in particular, but this is a good guideline. Scalpers, typically 1 to 3 trades a day could be an average day. Intraday trading, in and out of 3 positions within a trading session is a pretty high frequency trading even for a scalper. However, there are scalpers, like I was saying, that trade a lot more frequent than that. So that is not written in stone. Swing trader, this is around exactly where I'm at, about 2 to 5 trades per week. Now you can go a whole week without trading. You can have 6 trades, 7 trades, 8 trades in a week. I have limits that stop me from doing certain amounts of volume. However, there's still certain systems that call for and can have those different setups. And then we have position trader, which is going to be a few trades a month, really. Anywhere from 1, 2, 3 up to 5, 6, 7, 8. Really, you're not going to see that high up there. 8 trades within a month isn't really going to be considered position trading, but if this person, takes a high amount of positions and position trades them over a long period of time, maybe it is. But this is just giving you guys a little bit of an idea of typical frequency for the different styles of trading. Now, overtrading, the main purpose of assessing this video was to assess overtrading. I just wanted to give you guys this quick breakdown prior to, so you had a little bit of background with it. Overtrading, essentially what that is it's just trading too much. And by trading too much, the part of it that is too much is the useless trades that are included into your trading that you took for terrible reasons, not enough justification, and they just really weren't well executed trades. Those are the trades that you need to eliminate from your trading if you want to take a step to the next level. It is amazing how much you can progress simply by eliminating bad trades. It's not even adding good trades that can change your trading drastically. It's a lot more so eliminating the bad ones. Okay, so overtrading affects any style of trader: scalper, position trader, swing trader, it doesn't matter. Overtrading can affect any style of trader. Almost every trader experiences it in some way at some point. Yes, there are some very timid traders out there that are more afraid to take trades than anything, but that is 99.99% of the time not the case. And I'm sure everyone watching this can vouch for they either already know that they overtrade, which is a huge step, like we talk about, the AA meetings, confessing. That's the first step, getting past that denial, coming out and saying that you have this problem, overtrading. Some of you guys watching this might not have known you did it up until this video. Some of you guys are going to go back and look at your trades now and then you'll realize it. However, as soon as you start documenting your trading and realizing what you're doing, you will start to realize no matter what you do or who you are, you most likely have overtrading ingrained into your trading. There's a lot of different reasons for this: emotionally, social media, listening to people you see online, seeing a post from a trader that you think is successful and it makes you get on your platform and hop into the trade with them. You hear something on the radio and you want to buy it. Someone tells you something going on in a different country, you want to buy or sell their currency. A lot of different things can lead to these, and lack of plan is really one of the biggest to me. Even when you have a plan that you follow, overtrading a lot of times can come into play. You either take a trade not following your plan and mess up, or you force a trade to fit your plan that really didn't fit the perfect specifications in your plan, and you just fudged 1 or 2 here or there, or made it in your mind sound like it was okay for that one, or whatever the case may be. Lack of plan is another huge reason for overtrading. Something I go over in my course with my students big time. Majority of the course is spent on teaching you guys fundamentals, fundamental analysis and the core aspects of trading and developing a plan with them. So having a plan is one of the biggest reasons for overtrading. And then we've got traders rarely ever suffer from undertrading unless a plan is developed and fear prevents the trader from executing. So one of the reasons that undertrading can come into play is if you have a trading plan and maybe it's been performing poorly and you don't want to face the facts that you're not the best trader or your plan's not the best plan at this moment. So you're afraid to execute trades because you don't want the outcome to be a loss and your plan to come up as unsuccessful. So you just sit on your trading plan and you don't execute it. That's where undertrading come into play, but essentially overtrading is going to be the biggest problem, and most people are going to suffer from overtrading. I personally have never had any problem facing my failures, facing the fact that I sucked as a trader or that my trading plan sucked along the years. So I never was afraid to execute because if it was wrong, it was wrong. I was wrong. I learned and I moved on. That's the best mindset to try to have to learn this game, but sometimes you got to develop that mindset over time, and it takes some humbling experiences to get you there. So make sure that you don't suffer from undertrading as well. However, overtrading is going to be the big aspect we're focusing on and that most traders get damaged by. Overtrading triggers. So some of the things that cause overtrading to happen, as you guys know, a majority of trading is the emotional side of things. You could teach a third grader how to read technical analysis in a relatively quick period of time. However, the psychological errors, mistakes, and downfalls that we suffer as traders day in and day out is really what's going to determine the successful from the unsuccessful. And that mental dedication and hard work and perseverance to stick through all the years of failure and all the failing plans and all the failing trades and not give up and to continue trading until you find a way to succeed. That is going to be what separates the winners from the losers. And that is all mindset and mentality as well. That's not a skill. That's not a God-given talent. Trading isn't, something that you're just naturally athletic and you can just do. Even naturally athletic people take thousands and thousands of hours and years and years and years and years of discipline, training, experience, hard work, blood, sweat, and tears before they can say they're a professional athlete, right? So the most freak Bo Jackson, the most freak athlete ever, never even worked out or anything, still had to spend years and years and years and years honing his skills and training to become to the level he was at. Even though he was born into the most gifted body imaginable, it still took hours and hours and hours a day and years and years and years of his life to get there. So trading is no different. You might have a little bit better of a mindset than the next trader next to you, and you might think you're a little better off because you can control this better or that better or whatever. That doesn't change anything. It's still going to take a long time and a lot of trading to succeed in this business. It's a profession like anything else. You don't become a doctor in 3 months, so why do you think you're going to become a professional trader, right? So these emotions are going to be the make or break it for most people in trading. Most people don't succeed in trading because they give up. It's just too much for them. They can't handle it, and they move on to something else. So these same emotions are broken down to every little aspect of trading, and overtrading is one of them big time. So greed. Greed is an emotion that we know hurts us in a lot of things in life. However, with trading, it's one of the biggest. And wanting to make money and be in the markets causes us to make more trades than we need to, and really essentially causes us to make more losing trades than we need to, which is what we want to focus on. Fear is another emotion that triggers us to overtrade too much. Not wanting to miss out on a big move or potential for making money. You see a trade that looks awesome, but it's not your plan, and you trade it anyways because it's the best trade ever and you don't want to miss it. Like I'm sure you guys have heard me say before, every single trade you ever make, every time you ever put money at risk in the markets should be the best trade ever. There should never be a trade that you're placing your money on that's not the best setup you've ever seen. That's why we build a perfect trading plan for the perfect setup. So when that perfect setup happens, you execute. If it doesn't, you don't execute. And when you see somebody else post on Instagram that pound dollar is going long and it looks like an awesome long, but it doesn't fit your trading plan, and you trade it anyway, and then it loses, and now you have a shitty trade to mess up all the data in your trading plan, that's on you and your lack of discipline and emotional control, right? So with fear, we do not want to miss out on a move and a potential money-making opportunity, so we jump into a trade that we should not be in to begin with. That is how fear can trigger overtrading. Boredom. I personally, guys, the reason I am able to cover this like I am is because I have suffered from all of these 10 times over. I still do suffer from all of these. It's still an ongoing battle that I constantly have to be fighting. But that is why I love this game. It's constantly challenging. It's constantly pushing you to your limits and testing you. And these emotions are what does it. The reason that I came up with all these is not something I read in a book. It's not something I found talking to other traders. It is something that I got advice from a lot of people about, and I have heard other people preach about before, a lot of these. But these are my personal experiences, and I'm sure a lot of you will be able to relate to these if you've traded before. Boredom, another one that used to cripple me. Staring at the charts for too long and feeling the need to do something. So when you're learning to trade, which this is a profession you're always learning to trade, you feel the longer you sit and stare and analyze the charts, the faster you'll pick this up, the faster you'll succeed at it. Although that is true, to an extent, it's not. I used to suffer from this. I would stare at charts as long as I could all day long, no matter what I was doing. And essentially, I would get bored and I would trade. I'd be staring at the charts. I'd be behind the charts. I'd find a nice setup and I'd want to trade it no matter what's going on. And so when you spend too much time staring at the charts, you end up wanting to trade just because you're there. So you need to focus your time. Don't just sit there and stare at charts. If you're going to sit there and stare at charts, read something and apply it to the charts. Watch something and apply it to the charts. Test a strategy on the charts and see how it performs. Do something productive with that time instead of just sitting there wanting to create a trade. Revenge, another reason for overtrading. You make a losing trade, you lose your money. Human instinct, when you suffer pain or loss, you immediately want to get rid of that feeling. You don't want to feel pain or loss any longer. You you roll your ankle, you hurt your ankle, you want to put ice on it, so you stop the pain. You touch a stove, it's hot, it burns your hand, you remove your hand immediately because you want the pain to stop. Now, this exact instinctual emotions of us as human beings carry into trading. You make a losing trade, you lose your money. Instinctively, you want to get rid of that pain. What do? You get into another trade because the fastest way to remove that pain is by winning the next trade and getting that money back. What this typically does is it leads to another losing trade, and then that feeling just develops even stronger. Now you have even more pain and you want to make it back even further, and you enter another trade, and it's a downward spiral, and you blow your account, or you lose 20% when you just grown your account by 10%. Now you doubled what you grew in losses, and now you dug yourself into a hole. So revenge trading can be extremely damaging, and it is something that everyone suffers from. It's just human instinct. It's something that when you're a kid you learn, and unfortunately you can't unlearn it now to trade. It's just something you're going to have to deal with. And setting up a plan and a routine and all that stuff like I teach in the course is how we avoid it. Overanalysis kind of goes hand in hand with boredom, but when you spend too much time analyzing the charts, say you go through your charts, you make your watch lists, and you see what trades you're going to be looking to set up, if you don't find something else to do and you keep sitting there analyzing them, you're eventually going to try to find a trade on those charts, and you're going to try to identify a trade and get into it. Now, this isn't going to match your plan. This isn't going to be a perfect setup. This is just going to be something that you, over analyzing the charts, you developed and created. So another thing that you really don't want to sit there and overanalyze charts, because you will force a trade to appear that shouldn't be there. That's not a perfect trade, doesn't make sense, doesn't fit your plan, whatever. And last and foremost, one of the biggest reasons and one of the things that most traders never succeed for is lack of a plan. Not having a strict plan to follow leads to placing too many trades. Plain and simple. You're just going to be trading anything that looks good. And by saying your plan is, oh yeah, I trade support, resistance, and I go in the direction of the trend. That's not a plan. That's not even like, okay, maybe that's the first step towards developing a plan, but how do you define support and resistance? You need clear definition for support and resistance. Is it 2 touches respecting a zone? Is it the wicks or the candle bodies? Is it a zone? Is it a point? Is it a number? What defines this? What defines a trend? How do you determine if it's a trend? Do you trade only strong trends, weak trends, new trends, old trends? What other factors are you looking at? All of these things go into developing a plan. And if you just say you're a trend trader, or you trade Fibonacci levels, or you trade candlesticks, that's not a plan. That's simply you read a book and now you're going to trade whenever you see a bullish engulfing candle. That's going to lead to a lot of over trading, because a lot of trades are going to look good. Now you're going to stack your lack of a plan up with your fear of missing out, and you see somebody post something on Instagram and, oh, there's a Fibonacci in it. I trade Fibonacci's. That's my plan. I'm in. No, that's not having a plan. Having a plan is a clear, step-by-step, detailed, exact setup that needs to occur for you to execute a trade. And there's no reason for you to be entering or exiting anything without it being exactly as your plan dictates. So when you have a trading plan that you've developed and that you've tested, I go through all this in CoreFX training program, but if you backtest, demo trade, and then enter live trading with a plan, and you have an exact system that you only trade when those exact conditions line up, then you can start to really zone in on your over trading. That's when you really want to start to, okay, part of your plan should be, if my exact setup occurs on a Sunday night, I'm not trading it because I don't like the liquidity on Sunday nights. There's too many false moves, too much illiquidity, too high spreads. I don't want to be in there. Or if your setup occurs on a Friday afternoon and you don't hold trades over the weekend, you want to have something in your system that tells you you're not trading on a Friday afternoon because there's not enough time for your trade to develop, and you're just going to end up holding over the weekend or closing a trade that there was no reason to take. Right? So there's all kinds of things. Then when you have this plan developed, you're going to start to realize that some of the conditions of your trading strategy you're going to fudge or leave out of a couple trades, or you're going to force support resistance to be there when it didn't quite hit your zone, or whatever it is. Over trading is always going to be something that you're going to have a problem with, so it's something you need to be assessing. And although over trading is going to always affect you, it's very simple to start to fix it. The fastest, easiest, best, most proven way to do it is by simply having a plan and journaling your trades. At the end of every week, look back, check on your trades, and you can easily determine if you overtraded or not. If you took trades that didn't fit your system, if you took trades because you saw them somewhere else, whatever it may be, when you start to journal and following a set plan, you can start to realize what trades you placed that were out of your plan. Now, I would, like I teach my class, I would recommend you guys create a dedicated account specifically for your trading plan, so you know every trade made on there follows your plan, and if you make one that doesn't, you know that you messed up and didn't follow your plan, you overtraded, right? So journal, go back and look at your results, and you can quickly and easily identify if you're overtrading. Make sure once you do identify this, you know why you took too many trades. Did you get greedy? Were you bored? Did you revenge trade? Did you overanalyze? Did you not follow your plan? Did you not have a plan? You need to identify this. If you identify that you made 3 boredom trades last week, and without those 3 trades, you would have had a 75% win ratio for the week, but instead you had a 40% win ratio, what you want to do is now, for the week ahead, make sure when you are spending too much time behind the charts and those boredom trades are starting to come in, you do something. Go to the gym, go for a run, go hang out with friends, go drink a beer, go spin yarn, whatever it is that you do. Find something to get you away from those charts and get you away from those errors and those boredom trades. That is the only way you're going to evolve and take it to the next step as a trader. And I promise a lot of you guys listening to this might not think that overtrading affects you, or you might do and you just are lost figuring it out. Follow these steps. Follow these steps, and I promise you it will help your trading. Cutting the losers. That is the biggest aspect overtrading helped me with. And overtrading was something I really didn't assess too much until late in my career. I've been trading for almost 6 years. I trade professionally. I do professional analysis, and I consider my career to be brand new. I consider trading to be a brand new career of mine. I have multiple streams of income, not only trading. So one day when I have everything coming in off my trading alone, and I have a big enough account and management to be able to only trade, although I probably will never have one source of income only, that's when I'll consider my career to be, senior. I'm still a very rookie early on in my career of trading. However, that being said, I have a lot of experience. I have learned a lot of things. And one of the biggest landmark changes I noticed, aside from, you know, all the developing a trading plan, journaling, all that properly, that was all. I wasn't even considered a trader before I started doing that. I was just some schmuck that opened up my charts and gambled money like I was playing blackjack every once in a while. I didn't become a trader until I had a plan and I journaled my results. That's when you're a trader. When you just open and trade whenever you want, however you want, you're just a gambler. You're just that slot player that goes to the casino once or twice a week or a month or a day and just pushes random buttons. So my actual trading really improved once I started to discover my overtrading, and that was mainly because I started to cut my losers. If you look back at your last 20 trades, anyone listening to this video, there will be some good trades, for sure. There should be at least, and there will be some bad trades. Now, those bad trades are going to either be bad as in your trading plan or system just didn't work and it was a loser, which is statistically a part of trading, or it's going to be bad because you took a trade you shouldn't have traded. You took a trade because you were bored, you took a trade because you were scared, you took a trade because Jimmy Bob and the Forex gods of the world set a signal up that they knew 100,000% was going to be a winner. Jimmy John and the crew was a losing trade, but they're still posting up those same things, right? I just totally made that up, just so you guys know. But this, just hypothetically, that is how this works. You look at your past 20 trades, and you're going to see 5 of them that you should have never taken. Take them out. Now you have 15 trades. I bet you anything, your trading looks a lot better once you took those over trades out, right? And the higher level you get to in trading, the more this will start to help your strategy. What really kills you as a trader are all the extra trades that you took for no justifiable reason. That's what I've been saying. I don't have to explain that again. That is just saying that you guys need to narrow down your trading to only the important specific trades. Once you have a plan, following it and only trading the proper setups becomes the next big challenge. So developing that plan, having that routine, and journaling your results is the first huge step for anyone that wants to take trading seriously. However, the next big step is going to be, once you have that plan, following it precisely and as disciplined as humanly possible. That's going to be your next big step. And you're going to overtrade for a while even when you have a plan because you're just not following it properly. Or you have another account that you trade whatever the hell you want, whenever the hell you want, and you lose all your money on that account. This is where, you know, there's challenges to every step of the phase. And if you can cut out these unnecessary trades and only trade the perfect setups, I promise your trading will drastically change. Now, I'm not saying that you're going to go from a losing trader to a profitable trader, but I bet there's a good chance you go from a losing trader to a break-even trader. Wouldn't you rather be breaking even while you're learning than losing all your money while you're learning? So going through, analyzing your trades, and really determining what you're doing wrong with overtrading can be a huge turning point in your trading. I assure you that, guys. All right. So I switched over here to my course with CoreFX.com. If you guys want to just check it out, you know, I developed this course to help traders streamline their trading. Obviously, there is a business side of me doing this. I've identified another stream of income that I can generate off of the skills and the money I've spent learning these markets. So there's a reason I charge very, very, very small amount of money for the course, and I spend a lot of time one-on-one with my students, making sure that they understand everything and they progress properly and that they're taking the correct steps. I love doing this. However, this is just a quick breakdown of what my training is. Shows you guys step by step the outline of what's entitled, and I got trading plan development, trading journal, risk management, developing a routine, developing your edge, goals, psychology. Then you learn all the technical analysis, entries, exits, stop, exit, stop, entry, target, indicators, fib, patterns, candlesticks, higher time frame analysis, developing a watch list, multiple time frame analysis, entry methods for trend following. Then I go over my exact strategies that I have developed to give you guys idea of, you could either follow my exact systems or you can develop your own based off of real world examples of professional trading plans. And then I have preparing you for battle, back testing, how to properly test a strategy in historical time, so you can test 50 trades in a day rather than demo trading 50 trades in a year. Then I show you demo trading, how to properly go about it, properly set up an account, properly document your trades, and properly know if you have a system that is worth testing live. And then the real war zone live trading, getting out there and putting your system to work in the live markets. Live trading is where your psychological aspect is really going to come into play. All right, guys, I hope you got something out of this video. I hope you have a little bit of a better understanding of trading frequency and how it can affect you as a trader and how to overcome it. Stick with it, guys. If you've been trading for any amount of time, if you stick with it, you don't give up, you focus, and you put your effort into this, I promise you, in time, you will succeed. It's not going to be easy. You're going to break a lot of shit. You might break down into tears multiple times. You might lose a lot of money. You might make a lot of mistakes. You might lose a lot of time. You might do a lot of shit along the way, we'll say. However, one day it will become worth it. You will start to make money off of this effort and this stress and this wasted time. And essentially, it can lead to one day having the financial freedom to not have to work for somebody, to not have to fulfill someone else's dreams, to live your own, fulfill your own, and create the world that you want for yourself. All right, guys, stick with it. Let me know if you have any questions, student or not. You guys all know I'm an open book. I'm always here to talk to everybody. Let me know if you have any recommendations of future YouTube videos to make, and I'll make them. Otherwise, show some feedback on here. See if you like it. Subscribe to my page. You'll be notified. Turn the notifications on, and you'll be notified every time I upload a new video. However, I appreciate the support, guys. I appreciate the love. Thank you all. I will catch you in the next video, and have a good week.